Welcome to the Crazy Wisdom Podcast. My guest today is David Packham, and he is the CEO and co-founder of Chintai. And Chintai is a real-world assets platform that is going to tokenize real-world assets, something I've been hearing a lot more about recently. So welcome to the show.
Thank you very much. I'm going to also just move somewhere where it's a bit quieter for us, just because I'm conscious I've got some noise in the background. So hopefully this is going to be a bit easier for you to hear as well.
Great. So Chintai, what is the deal with real-world assets? What's going on right now with tokenizing real-world assets?
So tokenizing real-world assets. For me, getting into crypto back in 2016, I recall actually seeing a number of the prominent players of that era, like Brock Pierce, up on stage talking about how tokenization of real estate was one of the holy grails of blockchain, and that the potential to add liquidity to an illiquid asset class would transform the markets, the way we engage with it as an asset class. And then you fast forward 7, 8 years, and none of it's happened. That was the industry up until around about, I'd say, 2023, maybe even the start of 2024. And yeah, I definitely came on board with that same mindset. I came from a background in finance and technology, and I could see clearly the potential of the technology, which is why I was very interested in Ethereum and smart contracts. But for me, I was very interested in, how do we actually transform the global financial system and make it more equitable? Because I got to see from the inside Goldman Sachs doing the Big Short, right? I was working there when it happened. So I saw people making vast amounts of money, life-changing money, at the same time as the whole world was effectively being screwed by the system, being fundamentally broken and corrupt. And so for me, I've been always very, very passionate, therefore, about utilizing this technology the way it's intended, which is for good. It can be utilized, by the way, I think, in ways that are not good, which would be things like CBDCs, central bank digital currencies, for tracking and control of people. But it has huge potential to be used in ways that I think can positively transform the world. And I hope actually that crypto generally gets back to basics and fundamentals, because certainly when I was, and you and I got into crypto back in that era, it was full of OGs who were ideologically motivated in the right way. And I think, unfortunately, the downside of the ICO boom and then subsequently the NFT side and now meme coins is what we've also attracted in is a lot of people who are just there to be degenerate gamblers. And that's fine, because they're using the technology partly how it's intended. But I hope that as an industry, though, the focus, and maybe this is echoing CZ's perspective on this, but the focus goes back to the builders, the people who are really adding the true value in this sector. That's just definitely what I'd like to see.
Yeah, it's so crazy. The meme coin thing is so weird and so crazy. And it's not just within finance. It feels like a cultural thing that's going on among the West, where it's like our whole, you were during the 2008, you saw how the whole global financial system basically collapsed. And then they did multiple generations of cash infusions, which seemed like they were essentially bailing out their friends. And
which they were, I think.
Yeah, they were. It's like and nobody got arrested. Like, it was just
no one got arrested either. Yeah, absolutely no illegal activity to see here. Kind of reminds me of the Epstein client list, right? I mean, we've still not seen a thing or a single prosecution, despite mountains of video evidence. Apparently, so very clearly you see a system that only very much is two-tier. It works for different groups and classes. That's where crypto is so enlightening in that regard. The decentralization aspects make that kind of favoritism very hard to enforce in a given market. And yes, they can be manipulated in prices and so on and so forth, of course. But generally, when it comes to things like access, that becomes something that's available to all, whether it's Bitcoin or whether it's various other real-world assets to a fairly high degree as well.
Okay, this is really interesting, because this gets to the point where we were talking about before the show, which is essentially everybody now has access. You can't do the sort of laws that basically say that certain part of the population, only accredited investors can participate in this. Now it's wide open.
Well, you can. You can.
Okay, yeah. with legal regulation.
Well, so we've tried this experiment in crypto once already, which would be the Terra Luna network. For those not familiar, you could basically create an account in seconds move your crypto direct across from Binance, which back then didn't have KYC. It was basically, it was a crypto only exchange that didn't fiat on off ramp in those days. And then basically you were given a savings account that yielded you 20% per annum. You could stake into all sorts of other things that made you yield. And you could even, by the time it was starting to enter the problem phase, you had full stock tokens with exposure to real world assets. So as an industry, from a technical level, we've delivered on this promise already of almost delivering a full parallel financial system that you're right, doesn't have any controls on it related to that kind of thing. The problem with that is partly political, because governments don't want to lose control over understanding who's doing what and when. So there is a control and power element there. But then there's also, there are some legal implications, because, it's a phenomenal venue, or it was, for money laundering, which can fuel criminal activity. So there's legitimate concerns around this too. But where we are now as an industry with real world asset tokenization is, I would say serious players are now, like ourselves at Chintai, are stepping in with access to the right financial licenses and having used blockchain technology to build the right compliance controls to do kind of what you were saying, which is you can deploy a market now where only accredited grade investors can participate. They're still self-custodying on a blockchain account, but you're effectively whitelisting who is a valid market participant. And even if you try to send your tokens to someone else, they'll be blocked at the smart contract account level because they haven't passed the right KYC. So this is what we built out to enable real world asset tokenization to take place in those regulated asset sectors.
Interesting. So that's what you guys are doing, is going into different markets that already have their things totally mapped out, and then coding solutions. And so can you go more into which technology? Is it an ERC20? What did you guys go with?
Yeah. Right now, the history of our company is very interesting, actually. We emerged from the largest ICO that ever took place. Here's a quiz for you. What's the largest ICO ever?
Filecoin?
Let's see. Close, EOS. So the EOS ICO, I think it secured around about $4.2 billion. An interesting story, because in many ways it mirrors what Solana has become, which is supposed to be an alternative L1 scaling layer that did it better than Ethereum. And technically, it delivered on most of that. What we also saw as an interesting lesson for the industry is, if you don't invest hard in the ecosystem's development, build out front ends, and fund the projects the way Consensus have done with Ethereum, it will die. Effectively, without the water and the water of investment capital, seed capital, eventually communities die, and that's largely the end story of that. However, we are probably the only project to emerge from that ecosystem, and we were funded out pretty well, unlike most of them. So we have used that technology, although we're planning to migrate onto an alternative. Quite what that is yet, we will see, but it's a process we're going to kick off in the next year. But yeah, the RWA assets are ERC20 compatible. The problem generally is if I go through a compliant issuance and let's say we issue a security token, and it's accredited grade only. The moment you send it to a public chain like Ethereum or Solana, you're self-custodying, and what's to stop you selling it to anywhere, right? So this is why we're entering a period where you're going to see public chains fully operating, and then you're going to see compliant sort of zones within these chains or parallel to these chains where the real world asset trading will take place as well.
And so how is the asset tokenized? What did you guys figure out there?
Well, so you're talking, I think, maybe partly about assurance, which is the act of effectively ensuring that it is a real world asset backing the underlying token, right? So we have got partners in like Ernst & Young, EY, and others who are very interested in kind of stepping up to do this as an ongoing process. Generally, right now, what we're doing with the clients is that they're having to go through an assurance process themselves that we can prove to the investor base as part of the offering when they do it, and that's as it should be. But generally, other than that, it depends on what it is. I mean, if it's, for example, real estate, you're not really tokenizing real estate in most cases. You're tokenizing an SPV holdco that owns the real estate. And that's because you can't reflect down to the land deed registry at the moment because they're not on blockchain and they're not integrated into it. So to actually have true fractionalized real estate where maybe it literally does look like a share registry, and if I own 8% of it, it actually is updating in real time on some sort of registry. That we're a long way off that. So instead, certainly as an interim step, that's what we're generally seeing the clients wanting to do.
And so besides real estate, what are the other, I did an interview with somebody out of Portugal who was actually, no, their business was headquartered in Guernsey, and they were doing real world assets, but the assets themselves were debt. So private debt. Are there anything besides real estate or like home loans, car loans, those types of things that are being tokenized?
Oh, absolutely, yeah. I mean, on real estate, just to say, it's not even as simple as just tokenizing real estate. Some people are using it as a vehicle to raise capital to buy real estate or fund out things like hotel complex developments. Others are using the tokenization process to actually, in one case, they own a Manhattan real estate portfolio. They're tokenizing the rental yields. So it's a yield bearing token linked to the rental yields that come off this. It's Manhattan real estate, 350 million USD's worth. And the reason they're doing that is so they can free up that collateral now to buy more real estate. I like seeing innovation like this because it shows you how powerful tokenization is. And all of this is, commercially driven. So the yields are commercially driven. None of this circular inflation-driven bullshit that we often do in DeFi to try and give fake yields, and then it's ends up imploding. We've seen this before. This is very much commercially driven stuff. But to your question, yeah, I mean we've seen a lot of traction in funds, and we've seen a lot of traction. We had up until recently in the carbon sector as well. They're probably the big two beyond real estate right now. One example of that, DNA, who you may or may not have heard of. They were a very large crypto VC OG fund. They funded out Bitfinex, Tether. They were part of the original Ethereum ICO launch, and many other things they funded out from the space. They took a break for a cycle because I think they did so well, and now they've actually reformed the fund in the last couple of years. What they decided they wanted to do is to actually kind of lead by example and launch something called the DNA Deal Desk. And what they're doing is every investment cohort they have, they tokenize it, and you can log into their site as an onboard as an investor. You can buy and sell actively those investments in these early stage companies. So for the first time, rather than you saying, look, here's $1 million and I'd love it back sometime in the next 7 years, that's kind of how it typically works. You now can actually exit in theory whenever you want, and you can invest whenever you want, so that we're making the investment process much more efficient and liquid, direct to investor.
Whoa, but that will also put some insane pressure because that will basically mean that private companies are operating as if they're public companies.
Yeah, I mean, effectively, what it means is that the IPO becomes obsolete because you can launch a liquid secondary market for your equity at much earlier stages. You're not wrong. I mean, we've actually had this put to us already as ourselves. I'd really like to buy some equity, and so it will be very easy for us to go through one of our clients because we have the licensing too. But yeah, tokenize 10% of our equity holdings at a fixed price and make it available. Actually, DNA did that because they had an allocation in the summer, and they gave a great deal to their investors. They passed it on at the original price, despite it being marked down substantially, and it filled out pretty rapidly. I think it was about $2 million worth. But so we are at a point now as an industry where real world asset tokenization is happening. It's compliant. We're pulling in major financial institutions all over the place, and on top of that, we've got a strategic Bitcoin reserve from the largest economy in the world, and a pro crypto environment in the US, and yet everything is tanking despite all that. We've got, by the way, $1.6 billion of confirmed deal flow on the chain. I think around about 600 to 800 million has been issued in the last 6 months. And we're probably tracking, by my estimate, for maybe as much as 10 billion by the end of the year. And we're down on when we first started making all the commercial announcements at the start of December.
It's so crazy. So interesting. It's so crazy.
But guess what? We have flipped briefly Fartcoin now. Fartcoin hit a $2 billion market cap, whereas checks had only peaked at about 800 million. They're about the same now. So, I like to say that shit and cream rise to the top. So there we go.
That's cool. So interesting because I like to think that I'm able to find things that other people aren't finding. And it's so interesting to watch the meme coin stuff go on. And just I'm down here in Buenos Aires and I'm surrounded by a lot of people in the crypto industry. And it's been really interesting to watch that, particularly because we have been in Argentina while Javier Milei got messed up with a meme coin, which thankfully also seems to have put like basically wiped out the meme coin as status type of thing. Like nobody's.
Well, I think it was getting ridiculous because I think what was starting to happen at the back end of this cycle was public figures were being effectively lied to and misled by that Hawk Tour girl.
Yeah.
I don't think she had Haley Welch. She didn't have a clue what was actually happening. She was not. She didn't engineer the rug on that Hawk coin. It was other people who 100% utilized and misled her.
That's probably the same.
And I think Milei, if any involvement was very similar, which is he definitely didn't know that other people were front running this and gonna rug people, because the reputational damage is on them, not on the people behind the scenes. So you can tell that they are actually victims too, even though the anger is focused very much on them as the public facing figure.
It's really interesting. I want to go back to this point of IPOs going obsolete, basically, because for a long time I've been thinking that there's something new coming, right? We have the information age, the industrial age. It's going to be the informational industrial age. There's going to be lots of industrial age things going on, but now we've got this much larger layer of the information age. And as of that, we're like the systems, the institutions, as the institutions are collapsing, a large part of that institutional the mechanics of the institution feels like it's going to start moving into blockchain-based things. It feels like almost like a cliche thing to say that, but at the same time, I do think that's where it's headed. Like anything that can be put into this way in a way that saves people's property rights outside of this sort of Leviathan that's collapsing with the industrial age part of it. And so IPOs becoming obsolete. Like, at what point am I going to start to actually, do you think that is an accurate analysis? And do you have do you agree or you disagree?
No, I agree with your assessment on that generally, I think. Yeah.
And so where does that head? Like what will be, so we're tokenizing real world assets. Are we going to tokenize government? Like, is government going to become somehow not necessarily tied to the US Constitution?
Well, I mean, yeah, look at Doge. Got to love that a meme coin ended up, defining a movement within a government to clean it up. But one of the things they're talking about is this idea of putting the entire Federal Reserve spending and transactional activity on a blockchain that can be properly audited, right? Why is that a bad idea, actually, to have a distributed ledger that has, permissioned access, but enables people to actually see what the hell's going on? Well, if you're an honest actor, there is nothing bad from that. So I think what will end up happening is we'll probably see some early examples of it starting to deploy in certain places. And when that happens, they'll be so successful that eventually political change bit by bit will happen. There will be resistance in various places and countries to it. Oh, by the way, I'll tell you a fun example of this. Actually, I was in China. I was in Hong Kong a couple of weeks ago. And I said to a Chinese guy who was over from there, I said, it must be so terrible with all I was talking about the corruption in the US, actually, that was being uncovered by Doge. And I said, and presumably it's kind of the same with the CCP, the Communist Chinese Party there. And he said, oh no. He said, you don't understand. He said, ever since they moved everything to a CBDC and everything goes through, do you know the name of the WhatsApp equivalent they have there? WeChat.
Yeah.
Yeah. He said it's completely cleaned them up because it's not just the people spending that's being monitored now. Everyone in the CCP spending has too. So the knock-on effect has been it's cleaned up the party because none of them can do anything corrupt anymore either. And I thought, wow, I'd never considered that actually it's like a disinfectant for all sides in such a scenario. It's fascinating. And he lives in China. I won't obviously disclose where, but he's quite a free thinker and speaker. And it was just an interesting example, right, of unintended consequences. You can bet when they put this in, it was all about control of the people. Right, so we can monitor you and other. The problem with monitoring tools that powerful is it gets rolled out to everybody, and then suddenly you've got no place to hide either. So interesting, an interesting thought experiment, right? To consider it from that perspective.
And I wonder, because in China, I imagine that the CCP, so I imagine there's some level of power where they are able to get out of it inside of the CCP. So it's like, because
I
they
don't know. I don't know. Yeah, all I know is that it's certainly far better. It's been far better run as a country than the US for quite some time, and that's it's a bit like Singapore. People like to sort of criticize Singapore not being a democracy because it's had the same government for 70 years and whatever. It's undeniably vastly better run as a society and as a country, or it's more of a city state than pretty much anywhere else in the West, having spent time there. And so, yeah, I've long gone beyond piously lecturing anybody on politics like that when you see a society functioning arguably far better than the West.
Yeah. And yeah, while we have a fair amount of corruption that is coming out for a while now. So I want to go into Singapore. Is Singapore the capital of crypto business now?
I don't think so. And I'll tell you why. I think Singapore positions itself extremely well in a unique period when the Chinese had made Hong Kong flip anti-crypto, and the US had an actively anti-crypto, not only government, but a major agency that was actively hostile and targeting crypto globally in the SEC at the time under So during that period, London was completely full of crap, and I say that as a Brit. It was talking the talk about it, published a very good guidance and set of frameworks on digital assets, but wasn't issuing any licenses. It really wasn't open for business at all to entrepreneurs whatsoever in that field. By contrast, the Monetary Authority of Singapore is probably, maybe arguably, the world's best regulator, extremely professional. They do have a fantastic English common law-based legal system, low corruption, deep capital markets, although not that deep, but they've got them, et cetera, et cetera. So it was for a time, I would say, arguably, yes, the central hub globally. But the problem it has is it doesn't have a culture that is particularly entrepreneurial, especially when you contrast it with China, Hong Kong, and the US. And so what's interesting for us is we've spent years trying to really gain commercial traction in Singapore and around it, in the countries around it. Couldn't really get anywhere. No one would take the first step and make various moves, even though we're already trying to give them phenomenal deals. The US woke up about 7-8 months ago and does what America does in a world-class way, and we've just got a snowball of sales, traction, and business things going on. We're just signing up clients constantly. I'd say 80% of our business is US-based now, and we're expanding heavily there. And then the other side where we're seeing major traction is Hong Kong and China, because, again, they're very entrepreneurial people as well. And now they are able to, they're far more prepared to. And the knock-on effect of that is that Singapore is finally waking up, and people there are starting to want to do things too, because they're seeing it happen elsewhere. So to your question, or your where the true hub is, I don't think it's been decided yet. But for me, it will end up being a place that has access to the right ecosystem and depth of capital markets, as well as an entrepreneurial culture. So I suspect it'll probably be two places. We will see. Hong Kong certainly will be a major player. Singapore will continue to be, to some degree as well. Probably the US too. I don't know what the hub technically of that would be necessarily, right? Hard to tell, but we live in a virtual age. Does it really need to be geographical beyond the country? I don't think it does, actually.
Yeah, and the whole promise of this is decentralized as well. But isn't it just
right? Yeah.
Yeah, like, isn't it crazy how a year ago it seemed like none of this could have ever been possible, like the United States jumping back, or like somehow moving from what it was going on before, where it was the most pessimistic view take possible, like the tornado cash guys getting run out by the US government.
Well, that's deeply concerning. As a precedent, software developers who've not actually committed any crime themselves, just publishing open source software is to me indefensible. Right? It'd be like it's literally, to me, like imprisoning somebody for writing a book and not even publishing it necessarily, or maybe they publish a book, but the point is, yeah, it's not a non-violent crime, and are words really a crime, right? I mean, it depends what part of the world you're from. I'm a big believer in free speech, so no, to me, it's not.
Yeah, and this gets into a question of like Western values as well. which is really interesting coming from where I come from in Silicon Valley, because so many people built their business off of these strong fundamental values of the United States, and then often then completely disregarded them, particularly in a
What
lot.
you mean in their business models, like the big tech models?
No,
Or
yeah,
are you talking about?
the big tech companies basically won out huge by basing their businesses in the United States. There is no innovation like that without the United States, and there is no innovation like that without the long tradition of the United States from the Enlightenment, rational European like worldview. Like it all
For
went
sure.
to Silicon Valley, and then Silicon Valley during the 19 or late 20s. I feel it started to become corrupted from its own ideology. And then by 2020, basically there was a pure abandonment of the values when it was a crisis. Yeah, and I get that it was a crisis and
Well,
everything. Yeah.
it may make you feel slightly better to know that not all is lost for California at all, because the team that I've luckily for me, one of the co-founders is based in California too, and so via his network, the people we've brought on over the last 6 months, phenomenal people. They've got everything that embodies the American business spirit. They're incredibly hardworking, dynamic, proactive, risk-taking entrepreneurs, right? And so what it has done actually is provided a level, I think, of awareness to some of our team in Europe and Asia, just how damn hard these people will push. And it's an almost insane breakneck speed, and an expectation people will follow and move at the same pace as them. For me, it's been fascinating because I come from a country that's sort of in the middle of all of this, right? The UK has been known as being typically, I mean, I think it's probably more socialist than capitalist anymore, but it was when I was growing up, somewhere in between. It was, more capitalist and entrepreneurial than the rest of Europe generally. Yep. But nowhere near as as the US. And sort of seeing all this unfold now, it's very obvious to me why the US has, and particularly in the tech sector, has outperformed for decades and continues to accelerate, certainly versus Europe. Really, for me, it's only Asia is the only place, China in particular, where they have people who will work even harder than the Americans, and they will go and do, almost to the nth degree, and super smart people. Let's be honest, the Chinese are incredibly smart people, and that they are very, very impressive generally to work with. I've felt very privileged to have a chance to kind of work with some of the best in the US and in Asia as a result of the business.
Very interesting. There's one point we could talk about, which is the automation of China, and whether you've seen any insights into that, because that seems really interesting. But I want to go back to real world assets. You said something about, like, I want to understand the chain. So the chain of taking a real world asset, but it like, to my mind, a real world asset is a physical asset like real estate, but I don't think it's only limited to that as well. And so
it's not.
Yeah, and you said attribution, or there's some word, a technical word you use.
Assurance, I think, is the term. Yeah.
And then what are the other steps involved with the process of turning something into a tokenized real world asset?
Yeah, so there's a few things. I mean, we are operating a permissioned network right now, and the plan is that we will decentralize that fairly soon. We're getting closer and closer now to needing to bring in public validators, open up the entire network, and that will be a major event for the company at that point. But in the meantime, the reason we haven't done that is we needed full control to finalize many different aspects of the network, move and respond very quickly to smart contract updates for various companies and so on. The product effectively needed to get to a more mature state, because by DAO, when you're trying to be a dynamic company, I'm sure you're familiar, like DAOs, the problem with them is that even if you ignore that they have tended to centralization, or the decentralization aspects are a bit of an illusion the moment the government comes knocking and goes after certain unique individuals and they roll over. Outside of that, they're just incredibly unwieldy generally in terms of their ability to make decisions, or worse, governance can be should we say, suboptimal, because those making voting decisions may be either willfully uninformed or have got the wrong incentives for decision making, particularly if there's some sort of yield component related to the token that can corrupt the voting intentions. So anyway, that's a slight aside to this. Going back to your question on real world assets and the tokenization process. Generally, what we find is a client comes to us with a vision as to something they want to do in terms of building a new business line or a business, even from scratch. What we provide is the ability to white label the entire tech stack as a business for them, blockchain as a service, network as a service, right? And what that means is that they can then rapidly tokenize whatever their underlying real world asset is. They can connect into an increasingly wide distribution pool of investors, which you get the network effects as more and more are onboarding as well. And then there are various ways through crypto and into blockchain protocols to tap liquidity. And what we are going to do as more and more players come into this market is there's more and more potential for us to do a compliant issuance and move, say, 50% to a partner. It could be maybe it could be moved to the base chain, and Coinbase users can then be onward buyers directly through Coinbase, as an example, right? That kind of thing could be Kraken, it could be Binance, it could be any compliant exchange. You will be able to buy the real world assets, and that could be the underlying model where it happens. So that's how that side of things takes place. It's generally designed to be configured so that anybody can go in through the front end, configure the underlying digital asset, all of its core properties, hit the issuance button, and in theory, in parallel, deploy a secondary market. And it could be an AMM where you're deploying one side plus a certain proportion of the token supply, and you've got then a liquid secondary from inception too. That's the broad sort of process flow. But the assurance side is that's part of a much more complicated KYB process we do with the clients we're onboarding. So this is where we differ from Pump Fun. Like I half joked and said to somebody, we're normally described as the Shopify of RWA, right? Because you can get that analogy. Before Shopify, everyone was building their own websites. Blah, blah, blah. Before RWA, everyone's having to build the infrastructure. Now they don't. But in many ways, you could describe us as the Pump Fun of RWA. But the big difference is that Pump Fun, anybody can issue a token, and they do. With us, we go through a very robust, KYB process. To validate keys to their own version of the software, and the chain itself to actually go off and do things. Mm-hmm. So there are costs that go hand in hand with RWA. And one thing I would say that also differs them is that Pump Funds, aimed at crypto degens, whereas I think real world asset buyers are they're basically real world investors. They're investors, right? Yeah, they actually find, say, an 8% annual yield an attractive idea as part of a wider portfolio. They're looking for lower volatility, actual backing behind the asset. They're happy with something outperforming inflation, and it's part of a wider long-term strategy. They are not looking for 1,000% returns over the next 6 months, with chance of it going to zero if they don't manage to offload to some greater fall during that process. That's why we've already figured out that most of the degens are never going to be real world asset buyers, because that's not what they're in
until they've learned their lesson. Until they've learned. Well, yeah. But there are a substantial number of crypto whales who have reached that sophistication point where, for them, they have portfolio values of a certain size where they're used to cyclically rotating in and out of certain crypto assets. And at the moment, on the last cycle, the only option was USDT with 0% yield during that whole crypto winter, right? Whereas I think where we're about to move to with the next crypto downturn, assuming the winter hasn't arrived now, and I don't think it has, but it's, when the next crypto winter arrives, let's say in 18 months, 2 years, let's say it's 18 months, I think we'll be at a point where larger crypto holders will have an option to simply stay in the system and cycle into other assets, whether it's bonds, treasuries, it could be a yield-bearing instrument, et cetera, et cetera. They will have actual options to just stay in the token economy for the first time as a result of this. Very interesting. The startup equity, secondary markets for startup equity. Have you looked into that? Is that a potential?
We have. I mean, the problem with that is matching the investors with the company, because the problem is this: if the company's a giant steaming turd, tokenizing it doesn't magically make it fill out, right? And doesn't find you investors. So ultimately, the quality of the asset is what will dictate whether it will successfully distribute and fill or not. So I'll give you a simple example. If I came to you and said, we're going to tokenize SpaceX, OpenAI, and a variety of other high-grade private companies, that's going to fill, because most people would like exposure to SpaceX, but they can't get it right now because it's OTC only, private company, the largest private company in the world. But actually, we've already talked to several companies that own allocations that can tokenize the allocation and deploy a secondary market. So you can skip and go ahead of the IPO process and match to market, and you can simply price the tokens at the latest valuation as they do round after round, and it goes up, 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 and choose your exit point or buy in. And you're no longer limited by the illiquidity. You're no longer limited also by the lockup periods, the unknown lockup periods. So I think when we see more and more of examples of this going live, and hopefully we'll have some of them later in the year ourselves, I think these are going to become very powerful, because it's going to show the world and companies that the days of sort of having to raise, even at quite large scale, and not have any liquidity for your investors are coming to an end. And that will make for them the entire raise process increasingly easy as well. It actually makes the company more valuable if it's more liquid. That's usually why after an IPO, the value goes up. It's because of liquidity being, finally the actual asset is liquid. This is why real estate is generally considered to be massively undervalued as a sector versus everything else, because it's so inherently illiquid at the moment.
Yeah, that's really interesting about IPOs. But it also gets into the meme coin stuff, because it's a fundamental philosophical
Well, that's
question.
why they have value, that they're highly liquid and listed, right?
Yeah,
I mean,
highly liquid,
an
yeah.
important thing.
And just a product of the imagination, as you said, like gambling. Like my dad is an investor, and I have often asked him, what is the definition between a speculation and an investment? I don't think his answers have been very good, because I think he, as a venture capital investor, is a speculator. That's what you're doing. You're speculating on 10 years in the future, and you hope that one of those goes well. And it's just like, it's funny investigating certain aspects of reality and then having those aspects of reality turn into just like, what is it? Nobody knows what it is. Why is our world just this like funny world where finance is able to come in and do these insane things like create meme coins? But then it also has to do with the corruption, because there has been a lot of corruption. There has been a lot of low to negative interest rates as well. Or do you buy into that interest rates should, like, the primary way that civilizations destroy themselves is through low negative interest rates, debasing the money? Do you agree with that?
Oh, no. Well, two things. One, I don't think governments should be in control of the money supply at all. I think they're wholly incompetent and shouldn't be trusted with it. And that goes, therefore, with the associated management of it. It should be managed in a different way. I think the decline of civilizations usually is down to a decline in underlying societal standards in a variety of ways. So overindulgence of things like crime is a great sign of a declining civilization. So you go to Asia, they don't tolerate crime anywhere, and it's extremely safe, and it's a high trust society that functions well, like the West used to, but no longer does. And that for me is the sign of societies that are robust and are not declining versus ones that are. The only question is whether you can turn those around, but that's something of a philosophical discussion, I would say.
Mm-hmm. And it reminds me of the network state. A lot of people think we're headed into a not only decentralization of the financial markets, but also decentralizations of the nation state, and that will go more into a city state type of thing, which has been interesting to be down here in Buenos Aires in Argentina, because Argentina, as we were talking about before the show, is just this place where it sort of transcends the norms of global trends. And so it's also probably up until the recent election in the United States was a sort of free country, not free because the laws made it free, but more because the government itself wasn't powerful enough to actually do anything against people. So it's sort of like and as we were talking about, there's wide open spaces. And so it feels like, and we've essentially there's a bunch of expats here, and we've all gotten together, and we're kind of thinking into the future, and essentially, like, there's a lot of opportunity. I'm not really making the point really well, but the network state, the idea that our current industrial age large country types of forming alliances and trust and everything like that might change significantly. It might go into a city-state thing where the city itself becomes sort of disintermediated from the country itself. What do you think about that?
I think ideologically, it reminds me of communism. It sounds like a great idea on paper, but it doesn't take into account human nature. So that, and which is the fundamental flaw with communism as well. So, for example, with communism, the idea that people are going to work to their maximum capacity as hard as possible, take risks to set up a business and have it all confiscated to the masses, it actually incentivizes via human nature for you to do the bare minimum and take a steady paycheck and take zero risk, right? So with this, what it is failing to understand is how social cohesion generally operates within countries, which is the cultural aspect of this. So wherever we see, whether it's in and you see this across Asia too, in Singapore they have this, but you're seeing it across the West as well. Wherever you have large inflows of people that come in from other cultures to such a high degree that they don't integrate with that culture, they import their own and form ghettos. That causes massive social tension and cohesion, integration issues. It can cause all sorts of problems for all that. So the problem with that is, to overcome that, you would need to kind of move to a point where people no longer cared about their underlying cultural values. And the problem with that is that, unfortunately, we all do. We have generally, most of us, a lot of shared values, but there are a lot of people who don't. And so in that scenario, the question would be, how would that fit in, not with the national boundaries. For example, I'm English, and the English and the French have been warring for centuries, right? But actually, I've got far more in common with a Frenchman, and me. We could talk about football and drink fine wine and beer, and enjoy French food, because English is terrible, But the point is, we have a lot in common culturally. But then so the problem is not that. The problem is where you then try and apply this theory to cultures that are completely different and have a completely different value set, and that are not really fully compatible. And you see that when you bring them in en masse. It causes many social tensions, for sure.
And there's an interesting thing there, I think, that separates the two hemispheres as well, is that it's true in the United States, it's true in Canada, although Canada is really testing the boundaries right now, as well as the United States. It's true for Brazil, and it's true for Argentina. All four of these countries were large countries that all basically built their national identity off of accepting people from other cultures for about 100 years.
It's an unusual situation, because most countries are not like that. But yes, you are right there. They definitely have. It's the migrant culture, the concept that anybody who is born in America is American, and anybody who lives in America is, for a certain period of time, is American. I would argue that is not the case, because if you actually look culturally, I live in America. I don't consider myself American. Even if I took citizenship, I wouldn't consider myself to be as American as people born here.
Your kids would.
What's that?
Your kids would, though, right? If your kids would.
Well, again, they were born in England, right? And so they have dual nationality. They're I would argue they're much closer to being it. But to me, I don't think it's as simple as that, actually. I think it's about cultural alignment as to whether or not somebody is American or not. And for example, if they don't love the country they're in, love its history, understand its values, and align with those, then this is whatever country, this is a general observation. If I move to the Middle East and try to push pro-gay rights and Christianity over a Muslim country and whatever, then I don't think that would be necessarily culturally integrating with them, right? That would be me going in, actually, even though maybe I have citizenship in that country, I'm pushing my own, agenda and other cultural values on them, which causes social disruption. So you can play a thought experiment and reverse actually what's largely happening in the West right now, as an example. Definitely problems in the UK and Germany right now with that type of thing, and France.
Yeah, every country. This is another reason that Argentina somewhat transcends the norm, is because Argentina and the United States both had very similar immigration policies. Difference being in that in the 1960s, everybody wanted to go to the United States because it was on the upswing. Argentina went through its period of chaos, so nobody really wanted to come here. So it's really still very open, and not a lot of people were coming here.
Well, also ask yourself a question. So the immigrants that have come in generally, I mean, maybe I'm wrong, I'm not that familiar with Argentina, but they're going to be basically quite homogenous and culturally aligned, right? Or are you telling me they've come in from all over the place as well? Like, I don't know, China, India, the Middle East, Pakistan?
One of the
Where,
most interesting histories in the world. Argentina first, I just found out about a new wave. The first wave of people looking for asylum to Argentina from a crazy place were the Jewish people from Ukraine and Russia in the late 1800s. Before
but
that,
BC,
yeah,
yeah, that's fine. But Jews are actually known for being very good at actually pretty well integrating into wherever they go. They have their own cultural traditions,
very true.
but they largely they don't impose it on others, and they're not unless they're Orthodox. It's not even that obvious. So from that perspective, I'm not surprised that they would integrate well. But generally, that's been a story of history that they've ended up in a place and there's
Absolutely.
been some initial tension, and then they integrate extremely well
And
within a
then
generation.
the second wave was Armenians fleeing the Armenian genocide.
Oh, okay.
Most
Yeah.
interestingly, before World War II, more Jews came over from Europe. Then during after World War II, more Jews came over, and on the same boat, the Nazis came over. So like,
Oh yeah, that's right. You've got all the Nazis came down. I forgot.
yeah. It totally
Yeah,
transcends the rest of the world. It's a very
yeah,
interesting history.
that's
But
funny.
before all that happened, they had immigration from Italy and Spain, which made it a very strong European base.
Well, right, and it goes back to what I was saying about I would consider I could sit and have a great time with someone from Poland, Germany, France, Spain, Italy, etc., etc. Why? Because we're all European and we have a lot of shared common ancestry, history, and cultural alignment. So even though there's many cultural and language differences, we are aligned. So therefore, you think about that level of that type of migration into Argentina, it points towards long-term cultural cohesion.
Yeah.
It doesn't point that, and that's because they were aligned from the start, albeit they have some differences. That's where it works, immigration. That's why, the idea of the I don't know if you're familiar with the open borders they had within the European Union.
Yeah.
Well, if it's just the European Union, that actually was fine. Like I remember working in London, I had tons of people who were French. They were avoiding the high tax experiment. They ran a 98% tax rate in France, and so all the people left and moved to London. I think over 1 million French people moved to London as a result. But look, I have many French friends who I had a great time with, right, back in London, and they integrated incredibly well, as you would expect. So yeah, I think it's very different from somebody that's coming from the third world, who I would just have nothing in common with as a European, and that's just a reality. It's and that's though an interesting sort of thought experiment around why integration does often work and sometimes doesn't.
Brilliant. Well, thank you so much for coming on the show. How can people find out more about Chintai and more about you?
So we have a network token, Checks, which is listed on many exchanges, Bitfinex, Mexi, and many others. We are probably one of the largest market cap tokens in the world, not on a C1 yet. So fingers crossed, this is the year where we get 2 or 3. But what's that?
What is a C1?
What the ticker are you talking about for the token or something else? What did you ask me?
The first time something's been on a C1.
Oh, tier 1 exchange.
Tier
Sorry,
1.
tier 1. Yeah, tier 1 exchange. Like Coinbase, Kraken, Binance, etc. Yeah. But yeah, Chintai.io is where you can find out more. Also, ChintaiNexus.com. And ultimately, anybody who's interested in finding out more about real world asset tokenization and what that practically means, we're pretty active on socials on X as well. And I encourage you to sort of delve in and find out a bit more about generally the whole sector, because I think there's many other companies in this space doing some really interesting things. Ondo are obviously tokenizing treasuries. Mantra have got an upcoming launch of their sort of some of their stuff, although I don't think they're live with anything yet. And then Clearpool are doing some really interesting things, and we're working with them. So there's some great companies out there in this space, and I think those 4 and those 3 plus ourselves are definitely leading in this space. So it's going to be an interesting couple of years ahead.
And you said you were hiring for roles at the moment. What are you guys hiring for, in case one of our listeners might?
Business analysts, developers, customer support, compliance. The list goes on. Many people at the moment. Yeah, I mean the challenge we have is actually scaling the company to meet the demand from the clients. So while crypto feels like it's going through this sort of massive recession, we're kind of booming on a business level, and find it quite funny almost watching the network value just fluctuates so massively from, $750 million at the peak down to about 250 million right now or something crazy. It's interesting to watch it just all over the place like that.
Very interesting. Thank you so much for coming on the show.
Yeah, pleasure.